Welcome to our first video on how to use the free VT Cashbook software. The first thing we need to look at is how to download the software. Simply do a Google search for VT Cashbook. You can see the first result will probably be vtsoftware.co.uk/cashbook. Click on that, click on the download, then go to the VT Transaction Plus download, which includes the free Cashbook program. Just save and then run and follow through the instructions for downloading it onto your PC. All very simple and quite quick. You'll be asked to decide whether you want the VT accounts, VT Transaction Plus or VT Cashbook. Just click on the VT Cashbook. The others are the paid for versions, which most small businesses and households wouldn't need. Okay, so assuming you've got it loaded up okay, first thing we need to do is set up a new company. So we just need to put in, first is the business name of a company name. We'll just go something nice and simple. Our client's Goldthread Blogs. The next is whether you're VAT registered or not. And for this simple video, we'll assume that the business isn't VAT registered, so we take the tick box out. Next, we come to the chart of accounts. This basically is simply a list of the most common income and expenses analysis codes. Part of bookkeeping is being able to analyse your transactions into the various headings, certainly needed for your tax return, and if you're doing it for either your small business or your household, it's also useful to see where your money comes from and where it's being spent. There's really two options which we'll be looking at here. If it was just a basic sole trader business, it would just click on the sole trader. Or if you're doing your home financing, your household finances, and you're not in business, you'd click on the home finance. But here we'll do a sole trader. So click on the sole trader, and we'll just click at the bottom here, the preview template, just so you can see some of the headings that we'll be using. So we've got income headings. We've got the income analysis code and then all the subheadings under it: fees, interest, rent, sales, cost of sales, purchases, subcontractors, and expenses, accountants, advertising, rates, postage, travel, sundry expenses. So you can see there's quite a comprehensive list. If at all possible, you should try and use the list as it comes. That'll mean it gets put in the right place in the reports. Try not to add a new heading. It's easy enough to add a new heading, but usually 99% of the times there's no need. There's already a suitable heading there for you. So click on OK, and then we've got a new file set up. Just the first thing it wants you to do is just save it. Just got to remember, whenever you do anything, file and save. And also a good habit to get into is make sure you're backing it up either to an external hard drive or into the cloud or online backup system. So first thing, well, let's just start entering some transactions. We've got just a few options really, nice and simple. We can ignore the VAT return. We can ignore most of the top line at the moment. All we're really looking at is the money in, money out. This is a basic data entry screen. So when someone gives you some money or when you pay some money out, you enter it by clicking on this Enter Money In, Money Out button at the top. And then we've got the data entry screen. The first thing we have to do from here is pick which bank account we're dealing with. It defaults to your business current account. So that's fine in most cases. We'll look in a later video what to do if you want to use different bank accounts, maybe a private bank account or credit cards, or PayPal and taking credit card payments from customers using a merchant account. All those are added complications. The system works perfectly well, but far too much for this first video. So we'll just restrict ourselves to the current account. First thing really, as we can see at the bottom here, start balance nil, receipts nil, payments nil, and end balance nil. So this is basically your starting position. So this guy Fred Bloggs starts the business today. First thing he does is go down to the bank and pays some money in. The bank no doubt wants some money to open a business account for him. So it's money in. Now, if we look at the system down here, we've got three options. We've got one for a payment out, two for a check out, a check payment, or three for a receipt. Now, in terms of this bookkeeping, payment means money out and a receipt means money in. So receipt is receiving money. It's not the little piece of paper you get when you buy some petrol or your groceries or whatever. Try and get the terminology in your own mind before we go any further. And as it says there, check payments are identical to payments except they have different number series. So a check, putting something in as a check payment allows you to put the check number in for future reference purposes, but most payments out will just be payments because they'll be standing orders or direct debits. So first thing, let's show him putting some money in. So it's a receipt, it's money in. So it's a number 3. So we can either type in a number 3 or an R. And today's the date. It'll always default, the system will always default to today's date. So that's something to watch, especially if you're doing maybe a month in arrears or a couple of months in arrears, that you'll have to put the date the transaction actually happened, not necessarily today's date. So if you open this account at the beginning of December, we'd backdate the date to much earlier. We can change the dates simply by using the minus and plus keys. The minus keys send it backwards, the plus keys send it forward. It's also very good because if we know the transaction was the 15th of December, we can just put in 15. And as you can see there, the system's guessing we mean 15th of December. Or we could put in 1511 and the system's guessing 15th of November, the same year. So that makes data entry very quick indeed. So let's just put in the 30th of December, which is where we are, and it's proprietor introduction, because this is this guy Fred going into the bank, handing over some cash to open the bank account. So he's taking in 500 quid. Now it's not really income. This is the first element of the analysis ledger. And here we've got income, cost of sales and expenses. Forget these for the time being. And we come down to capital account. The capital account is a proprietor's account. It's his own personal introductions and his own personal drawings. So this is nothing to do with the business really. This is just a guy, his initial investment into the business. So it's capital account. And we've got 3 choices. The second choice is what it is, capital introduced. So that doesn't affect the tax, it's just money in from the proprietor, and it's effectively money owed by the business back to him at some future time. So that's the first bit of data entry we've done. A receipt, 500 quid, and we can see at the bottom, the computer now thinks that there's £500 in the bank account. So let's move through the day a bit. Now he's just got home from the bank account, he's going to order some business cards from Vistaprint, say. And obviously, as with everything online, it needs to be paid now. So we can assume he's either got his debit card in his hand or he's going to send them a backs payment. So again, the same date because it's today, Vistaprint, 25 quid. Expenses, because it's going to be money out, and within the expenses we've got all these codes we can use. Now business cards, it could be advertising or it could be further down in printing. Just choose whichever one you feel best matches the code. We really wouldn't want to be putting a new code in for business cards, so you got to try and use one of the existing codes. to a large extent, it doesn't really matter which code you use as long as it's somewhere near. You'll always find that there's a bit of ambiguity about which code to use. What's more important is being consistent. So the first time he buys his business cards, if he puts them down to stationery and printing, we really need to make sure that when he buys another batch in 6 months' time, it goes down to stationery and printing again. Nothing worse than a haphazard approach to where you're analysing the expenses. So that's his 25 quid going out, and we now see at the bottom the bank balance has gone down to 475 now. This is a theoretical bank balance. And let's just pay another check out. Sorry, not another check, another payment. And this time it's to one-on-one internet for website domain. And he's going to pay £37.50 for that. Again, it's a business expense, so in the analysis ledger it's expense. And really, a website domain is more advertising than anything else. So that can go into the advertising and PR, which stands for public relations. So that would also include marketing. So now he's paid that, his bank account now shows £437 in theory, on this computer system, which is the 500 he paid in and the two lots of for 25 and the 37.50 is paid out. So that's basically all he's done today. So we can save on that now, and the screen goes blank. And now when we come back to it, you'll see the start balance is 437.50, which was the closing balance of the previous screen. So let's just close that and let's look at some reports. If we're going to display the first report, well, the main report really for a cash book system is profit and loss account. And at the moment, this is just showing expenses broken down, advertising 38 quid and stationery and printing 25 quid, total £62. So as of today, at the moment, he's made a net loss of £62. So let's enter some more transaction, because now this afternoon he's been out and he's done some work, as our little Fred blogs. So it's back to money in, money out, current account, because the customer's paid him in check. So he's come back from the work and he's now got a number 3, which was the receipt, money in. Mrs. Smith paid him 50 quid. So it's sales. Whatever Fred blogs business, the actual work he's done would go down as income, sub-analysis to sales. And he's paid the cheque straight into the bank account on his way home. So now we see we have the 437.50 that he started with. He's just got another £50 in. So now the theoretical bank balance on the bank account, per the software anyway, is £487.50. So we save and close. And now back to the profit and loss account, we see his £50 of income and a £62 of expense, so his loss is now £12 for the first day. And that was a money in, money out screen. Now we can use this display bank account screen, which will show us the bank transactions today. 500 coming in, 25 going out, another 37.50 going out and 50 coming in, which gives us a total of 487.50. Now the final thing I want to do in this first video is the bank reconciliation, which is fundamental and really has to be done at least monthly, if not weekly. The whole idea of the reconciliation is to prove the bank balance per this system, the £487.50, against either the paper bank statements or the online banking balance. It needs to be done so to prove that you've put all the transactions in the system properly. It's far too easy to put something in as £73.50 instead of £37.50. It's also far too easy to put the £37.50 in twice if you've forgotten you'd already put it in, or not to put it in at all if you've forgotten to put it in. Now the bank reconciliation pulls it all together and proves the arithmetical accuracy. So what we need to do the bank reconciliation is up at the top here. The next button along, is reconcile bank account. If you click on that, now it's difficult without being able to show you the bank statement for this guy, but let's assume he's looking at his online bank. The £500 showing on his online bank statement, the £25 to Vistaprint and the £37.50 to One-on-One are all showing on his bank account. So on his internet banking screen, his statement is showing £437.50, which, because we've ticked these three, is the statement that this system shows up at the top right there, £437.50. So we're proving this figure to the online banking of a bank statement. This £50 isn't on because he only took it to the bank this afternoon. So the bank counter clerks probably won't have put it through the system and it won't be appearing on his online banking just yet. There might be a day or two's delay. So we don't click on the 50. All I'm doing here is just clicking with my mouse. And you can see this bank statement balance go up and down. So we're happy now. The 437.50 per this system agrees with what's showing on his bank screen. So we click on this little icon here, which is the reconciliation icon. And basically what that will do is these three transactions will then disappear from the screen, because this screen will only ever be the transactions in transit, as it were. The unmarked transactions since the last time you've done it. So we tick on that and it asks for a statement date. There isn't a statement number, it's just internet banking in this case. If you had a bank statement, it'd be statement number 1, the next month's statement number 2, etc. So we click on that, click on OK, and it's gone. So now the only thing left in the pipeline is this £50 cheque coming in. And at the bottom here we can see balance per internet banking is 437.50. Up here is the items in transit, which is just 1 at the moment. So the balance per the accounts, which is per this VT cash book, is 487.50. So that's how you prove your bank statement balance against your accounting software balance. Now, I've quoted an example here of cheques being paid in by a customer, but the same would apply to cheques you write out to your suppliers. They're not going to hit your bank statement for a few days. So if you write a lot of cheques out, there'll be a few payments in the payments column here. And you only click on them once they appear on your bank statement or your internet banking screen. So hopefully that will have shown you the most basic, simple data entry for bank payments in and out using the business current account. Now obviously it's going to get more complicated where you pay by credit card or a customer pays by PayPal, and we go on to that in later videos. But for the time being, that was it. I hope it gets you started on this system and hope to see you in a later